Thank you for standing by. The broadcast will begin shortly. Good morning. I'm Daryl Reese, and I'm here to talk with you about insurance matters for fire survivors. Today is Saturday, December 1st, 2018, and today's broadcast is a result of one of my sons, Jordan, and I talking about how we can help people who have been impacted by the recent fires in Paradise and really throughout California. My wife and I lost our home last year in the Tubbs fire, and we've been through the last year in some really working to understand how does the insurance process work and how do we get through this with really in the best possible way. First of all, for those of you who are listening in and who have lost your homes, my heartfelt sentiments for you. I know it's difficult. This is a very challenging time. Your reality is upside down and will be for a while. And hopefully today's broadcast will provide you some help to be able to get through some of the challenges that you are going to be facing as you deal with your insurance coverage. So a little bit more about me. I'm an attorney. I practice nonprofit law, business law, and estate planning. I practice throughout the state of California. And with regard to the insurance issue, so I really needed to understand how does insurance work, because you may have begun to explore your own insurance policy. It's not something that most of us understand when we take out our policy, and even when we face a claim such as a total loss of our home. So I ventured to really understand how my insurance policy worked, and talked with a lot of other friends and neighbors who lost their home as well and their insurance policies. And then as a result of that, I ended up serving some of my clients with helping them understand their insurance policies. And today I represent one client with his insurance company to help get the most out of his policy. And I'm going to talk through the lessons that I've learned through the last year. I'm not years steeped in insurance, but I am the last year certainly steeped in insurance and have a pretty solid understanding of how it really works. So my objective today is to be able to provide that information to you. And hopefully it will be valuable for you and for your loved ones, for your friends who have also lost their homes. So a couple of things that I want to talk about. First of all, some logistics. As I said, I'm a lawyer, and unfortunately, I have to say that this is an educational broadcast. It's not legal advice. There may be some legal issues that I talk about, but I'm not here to provide you with legal advice. And as a result, of course, there's no client-attorney relationship that's being established with this. This is a live chat on, like I said, today, December 1st, and to the extent that you're participating in this live, you have the opportunity to chat and ask questions. I am not seeing those questions on my screen. Those are being monitored by my son Jordan, and he will be sending me those as the questions apply to what I'm talking about. So if I'm not responding to your message or to your questions, please be patient, and it will either get answered during the broadcast, or if I'm not able to answer during the broadcast, I will answer questions in the comments section below the video once it's posted to YouTube. And if your question is a little bit more personal and you want something beyond that, then you can certainly send an email to me, and I will respond to your question as I have the opportunity to do so. I'm anticipating a number of questions because there's a lot of unknown and uncertainty with regard to insurance. And so please be patient with me if it takes me a little bit of time to get back with you on any questions that you might have. My email address, you'll see it. You might have seen it when you logged on with the opening screen. You'll see it at the end, of course, but let me give it to you. It is Reese, DREESE, at JohnstonThomas.com. So feel free to email me with that as we end the broadcast. I want to share with you the outline of what I want to cover today. And so we're going to be talking about organizing your homeowner's policy information. It's most of us don't know what are the documents that are included in my insurance policy. I'm going to walk through that with you. I'm going to talk about how maybe in common language you have buckets within your insurance policy, and what do those buckets hold, and how do those work, if you will. Working with your insurance company, some tips that I've learned, and some strategies with regard to making sure that when you're communicating with your insurance company, you're doing so effectively, getting the most out of each coverage area. I can tell you that you're not automatically going to get 100% of what each coverage area states in your policy, and my objective is today to help you understand how to get the maximum amount of each coverage area, if not 100% of each coverage area. And then with regard to kind of what do you do in the interim, renting, buying, or relocating, how does that play into what your insurance policy might provide for you? Maximizing your personal property claims. So these are two buckets, by the way, the renting, buying, and relocating. That kind of touches a couple of different buckets in your insurance policy. Your personal property claim, that is another bucket, if you will, personal property money, and we're going to talk about how to maximize that. Public adjusters. So there are companies out in the community, out in the world, who will help you with your insurance claim. They're called public adjusters, and we're going to talk about some of the pros and cons of using a public adjuster. This is all somewhat overwhelming when it comes to the numbers that are involved, and so I've got some insights on how to keep the numbers straight, and then other practical matters that may come up as well. And of course, we'll leave some time for questions beyond that. So I am going to jump in and talk about understanding your policy. So one of the things that you want to make sure that you do when you're, well, right now, actually, you've suffered a loss. And if you don't already have a complete copy of your insurance policy, it is critical that you have everything that the insurance company has, everything that you're entitled to be able to fully understand and interpret and navigate through your policy. So you will have, you should have, it's one of the things that you often get with your bill. Of course, you don't have that. You may have it electronically, but you should certainly have the declarations page. The declarations page is going to be, here's what it costs. It's going to have your invoice amount, but it's also going to have what your coverage amounts are. And I'm going to walk through a kind of a sample policy that's worth $250,000, assuming that somebody's coverage was $250,000 for their home, and then all of the subparts, and as I said earlier, all of the buckets that might be associated with that. But that's going to show up on your declarations page. The key buckets, if you will, are going to show up on your declarations page, but that is a small part of your insurance policy. My policy, so I have a binder of documents, and included in this binder, I suggest you make one, by the way. Included in this binder is my declarations page, and then the accompanying documents with my policy. And I can tell you, it's huge. So just So there's two separate sections because we're in California. One section is kind of the general policy endorsements, if you will, and that's 22 pages alone. And then there's another 28-page document for those of us who live in the state of California that the policy has that supersede or that take over for the that replace, I guess, provisions in your main endorsements. So, we're talking about over 50 pages of documentation that is included in your insurance policy. And it's important that you have all of it. It's also important that you identify how does it work together. So what I've done in mine is I have in the declarations page, there's a reference to all of the sub parts that accompany the policy itself. So of all of those 50 pages, all of them don't apply to me. It sometimes it says, if this is on your declarations page or if this is included in your policy, then this section applies. So you need to cross-reference that. And what I did was I just made a list of, all right, this particular number, that's on my declarations page. Let me go find that, highlight it, put a little sticky tab next to it, say this is number 1. You can do the same thing with number 2 through. I have 16 different endorsements with my policy, and you probably have something very similar to that to be able to then cross-reference to see what is it that those endorsements really mean. And that's where a lot of the funds from your insurance policy are going to come from. We're going to talk a little bit more about that. It's a lot of information to absorb. So hopefully you'll be able to, again, you'll be able to get your policy so you can ask your insurance agent or you can ask your adjuster. You should have been assigned an adjuster if you filed a claim, and simply request that you want your declarations page, your endorsements, any amendments, any additions to your policy, and they should provide that to you. I would ask for it in writing. In writing, it's simply an email. You can email your agent or you can email your adjuster, and you should be able to receive that. And frankly, you should be able to receive that via email as well. Print it out. You're going to be writing on these documents, and to try to do that simply on your computer is not going to be very effective. You need to be able to cross-reference and have a very clear understanding of what all of that coverage is. So let me talk now about the buckets that I was referring to. I'm going to share this screen here that identifies the different buckets. So on your declarations page, you will see Part A, Part B, Part C, and Part D. They're typically labeled, Part A is typically labeled dwelling, Part B is labeled as separate structures or something like that, Part C, personal property, and Part D, loss of use. Part A, as you can see, has the most most additions, if you will, to your policy, and that's what you're going to need to understand the most is your Part A. But Part A really, Part A dwelling really is your house itself. So the structure of your home, your foundation, everything that is the main residence is Part A, and then Part B is everything that is a structure on your property, but is not attached to your home. So it could be a shed, it could be a separate garage, it could be a granny unit, it could be a fence or gates, or even your driveway, your concrete pathway. So those are considered separate structures, and that's going to be covered separate from your main dwelling under Part A. Part C is personal property. I've heard it described as everything that falls out of your house if you were to turn it upside down and shake it. And it really is. It's any of your belongings, it's your artwork, it's your clothing, it's your furniture, your rugs, your not your wall-to-wall carpet, but your area rugs, anything of that sort that is considered something that you would have to buy after you move into the house. then that is personal property. And then loss of use is what the insurance company will pay you for living elsewhere while you are displaced from your home. So you're all living somewhere else right now. If you've lost your home, you're either renting an apartment or renting a home, or you're staying with a friend or staying at a hotel, whatever the case is. Those are that comes at an additional expense, and there are funds in your insurance policy to cover your loss of use. Loss of use also covers any loss of rent that you were receiving during the time that, any rent that you were receiving at your property. So, and I'll just use myself as an example. We had a small studio apartment underneath our garage. We lived on a hillside. Our main level was at the garage, at the street level, and then below there was a little kind of granny unit studio apartment underneath the garage, and we rented that out. So our loss of rent is something that was covered under our loss of use provision. So I'd like to walk through each one of these with a little bit more detail and explain kind of what's included, how's it going to work, and as you see in this diagram, kind of just the extras, if you will. So when it comes to dwelling Part A, again, that's the biggest chunk. So I'm going to assume, and I'm going to show you an example, but I'm going to assume you're a home that is insured for $250,000. That's going to be in the main Part A dwelling coverage. And then you see this area underneath it that's called extended coverage. Your policy likely has a provision that says extended coverage. Some of them are 50% of the main coverage. Some of them are higher than that. I haven't heard of any that are lower than that, but I suppose it's possible that those are there as well. That's going to increase your coverage by, I'll assume 50%. That's going to increase your coverage by 50% of what Part A says. So at this stage of the game, for the sake of simplicity, if you have $250,000 in coverage under Part A and you have extended coverage with 50%, your extended coverage is going to amount to an extra $125,000. And therefore, your dwelling coverage then to replace your home is $375,000. So that is the bulk of what is going to come out of Part A. But there are some other components in Part A. As you see, there's debris removal, there's trees, plants, and shrubs, and then there are code upgrades. I'll start with the simplest one, trees, plants, and shrubs. So this is your landscaping, essentially, or natural trees that existed on your property. You want to take an inventory of every single one of them, and you're probably going to need to just go by memory of what was in your yard or what was on your property as to the trees, plants, and shrubs that existed. The insurance company may send an adjuster out to do that for you or to do that with you, but you want to make sure you're doing it yourself to identify, all right, how many small trees, medium trees, large trees, small plants, medium plants, large plants, etc. and inventory those so that you can file a claim and you will be paid for your loss and then ultimately for your replacement of trees, plants, and shrubs. Code upgrades is another significant component of your dwelling coverage. Oh, by the way, trees, plants, and shrubs is likely going to be 5% of your Part A dwelling. And code upgrades is going to be likely 10% of your Part A dwelling. So if you had $250,000 in coverage for Part A, then your code upgrades are going to be, code upgrades means that any extra money that you need to spend to bring your rebuild up to the current codes in comparison to the way that it was built originally. So my house was built in 1972. The codes in 2019 or 2018 are significantly more stringent, and so I'm sure I'll be using all of my code upgrade money to do those. Just sprinklers alone, which is a requirement in the county that I live in, is a significant expense, and that would be considered a code upgrade, or better insulated windows, or a 2x6 walls as opposed to 2x4, a variety of other code upgrades that are going to exist. And then debris removal is another category that is going to be under Part A, Part B, and likely Part C. This is where you're going to find information in your policy to see exactly what does it say with regard to debris removal. I'm going to come back live so that I can just speak directly with you face to face, and we can go back to that chart, and I may do that so that we can speak about it easily, and you can see what I'm doing. But with regard to debris removal, so my policy specifically, and I think that it's not just my insurance company. It is it's a standard form that is provided to a lot of insurance, insurance recipients or insureds. And what it says is that debris removal is that my company will pay a reasonable amount for debris removal. And if I exceed my property coverage, it will pay an additional 5%. So the way that my insurance company actually has interpreted that is that the amount of money that I have for debris removal is 5% above my coverage. So that is for property loss. Now, property is not defined as simply dwelling. It's considered my dwelling, my separate structures, and my personal property. That's all within the scope of property. So I have a debris removal amount for each one of those categories. And I think what I'd like to do is share with you my sample, my sample kind of spreadsheet and how that works from a financial perspective. So let's take, again, your dwelling coverage, assuming the coverage is $250,000. Your extended coverage is $125,000. So your total coverage for dwelling to rebuild your home is $375,000. You have an extra $37,500 for code enhancements because that's 10%. And it's 10% of the coverage plus extended, not just the original coverage. So when you look at your policy, and you may not get that right out of the gate, but once you have a contract to rebuild and it's proven that it's going to cost you that extra 50%, then that all of that is going to kick in with your percentages. So let's just assume that you're there. You're at your $375,000 level, and you have $37,500 for code enhancement, 5% for trees, plants, and shrubs, which is $18,750. And then debris removal, as I said, is going to be interpreted as 5% of your property. So with regard to dwelling, you have 5% of your dwelling coverage, $18,750. You have another 5% of your separate structures. And I've established separate structures to be, again, separate structures is going to be 10%. Under the coverage column, if you will, on the left-hand side, where it says separate structures coverage 25,000, that's going to be 10% of your dwelling coverage. And then you're going to have an extra 50% on top of that $12,500 for a total separate structures of $37,500. 5% of that number, $37,500, equals $1,875. So you have separate structure debris removal coverage. It's the smallest component of debris removal, but you have debris removal coverage of $1,875. The same is true for personal property. So I'm assuming that your policy, and this is, of course, I'm assuming that this particular person had $125,000 worth of personal property coverage. Yours might be higher, it might be lower, it might be spot on there, but for the sake of example, I'm taking $125,000 and saying that that's what this particular individual or family had. As to whether or not there's extended coverage and there's an additional 50% is going to be based upon what your policy says. Most policies that I've been aware of do not have this, but some do. So I've seen where personal property is $125,000 and there's an additional 50% on top of that for extended coverage for what will amount to whatever the math is on there, coverage plus extended there. But assume that it is not there, that you're only going to get your what's listed on your policy of $125,000, and then your debris removal for personal property is 5% of that number. So in this case, it's $6,250. You can see that your debris removal total is $26,875. But it's a little bit difficult to ascertain that by just looking at your policy and saying, well, I've got 5% of my coverage. When I first started understanding insurance, my insurance policy, I thought all that I had was 5% of my main dwelling. I didn't realize that my extended coverage was included in that, and I didn't realize that my separate structures and personal property were included in that. So if I use myself as an example and my coverage was $250,000, I would have thought that I only had, let's see, what's the math on that? 5% of 250. So that would be $12,025, roughly. But as you can see, in reality, in this particular case, it's $26,875. So that's critical as you consider whether or not you're going to hire a private contractor to remove your debris on your property, or whether you're going to sign up with what FEMA may have to offer through Butte County or whatever county you may live in if you've lost your home and you live somewhere else. But that's a game changer. I can tell you that the FEMA contract that I originally signed, that my wife and I originally signed, we signed it because we didn't think we had sufficient coverage to remove our debris. And what we realized once we figured out these additional numbers is that we in fact did have sufficient coverage, and we were able to use a private contractor as opposed to FEMA. Why is that important? Because as a lawyer, I can tell you I have read the FEMA contract, and they can do whatever they want to do on your property, and they may end up causing damage on your property. They could end up leaving a large hole on your property, and you have no recourse whatsoever. The contract specifically says you cannot sue FEMA or their contractor for whatever they do on your land. That makes me nervous when I'm entering into a contract and I don't have any recourse if somebody doesn't do what they're supposed to do, or they do too much or not enough. And that's certainly how that contract is written. So beware of that, and be mindful of the amount of debris removal coverage that you actually have, and it may be a game changer for you as well. Let's see. I want to cover some of these other areas and make sure that that you understand each one of them. So going back to, I want to go back to the buckets here and share that with you again, and talk a little bit more about the about Part A and dwelling. So what's included in Part A? It's again, all of the things that I've already talked about. It also includes your soft costs. So it's going to include your architect and your structural engineer and your civil engineer and your soils engineer and then your permit. So all of those costs need to fit within everything that you're going to receive for that, really that first grouping, the Part A and the extended coverage. And I would say, leave debris removal out of that equation. But if you were to add all of the elements of your dwelling, your extended coverage, your trees, plants, and shrubs, and your code upgrades, that's the amount of money that you have to rebuild your house with insurance funds. Now, you may borrow or you may use other funds from other areas over here, but for the most part, what you have available to you based upon insurance coverage is in that area, and it needs to cover everything. So you might get a bid from a builder to rebuild your house for $375,000, but don't forget that you have quite a few other costs that are included in your rebuild, and all of those soft costs including like I said, the architects, engineers, and permits. Separate structures is really, so you can throw, actually, when you think about separate structures and you're rebuilding your house. So if you're including a driveway, of course, if you're including gates and fences, and if you are building another unit that's separate, if you're building a separate garage, that all would be included in your costs as well. So I suppose you could take Part A, Part B, the extended coverage for Part A, Part B, your code upgrades, your trees, plants, and shrubs, and that really is the amount of money that you have to rebuild your home. All right, let's talk about personal property for a moment. So again, personal property is the amount of money that you have available to you that you need to claim, that's in your policy, that will pay you essentially to replace your things. Now, hopefully you have already received some money from your insurance company. They should have written you a check immediately for you to go out and be able to replace some clothes and some personal belongings that you can get on your way and start living well without simply having to worry about when is the insurance money going to come in. But ultimately, what insurance companies do is they generally require that you inventory all of the personal property that you lost. It is an arduous task. I have a friend who spent 200 hours preparing their inventory to be able to submit to their insurance company. That's crazy. And I can tell you that there are other ways to get a lot, if not all, of your personal property money from your insurance company without having to prepare that list. Now, this is totally individual with insurance companies and different policies that they might have, different internal policies that they might have, as well as different circumstances that you might have individually. I can tell you what we did, and I can tell you that we did not prepare an inventory, and we ended up with 100% of our personal property coverage being paid out. It didn't happen overnight. It took a while. It took some work on our part, but it was a lot less work than having to go through all of the inventory of every single thing in our home, the garage, the rooms, everything, everywhere, every drawer in the kitchen. Just imagine all of the things that you would have to itemize and frankly relive some of the loss that you will be reliving anyway during the course of this process. But you do have the ability to approach your insurance company and to ask them for a payout of your personal property funds without having to prepare that list. And frankly, the California Insurance Commissioner has encouraged companies to do exactly that. They are not obligated to. There's no law that requires them to pay personal property money without that inventory list, but many of them are open to doing so. Here's what we did. Knowing that the insurance commissioner had recommended that insurance companies pay out personal property money without an inventory list, we simply made a request. We put our circumstances together. I wrote a letter. And when I say I wrote a letter, I wrote an email in a letter format. So I explained our circumstances and approached them with that proposal. I asked them for 100% of our personal property money. They came back and they said, no, we won't do that. That's not our policy, but we will provide you with 75%, which was awesome. But why leave that at that point if there's a possibility that you can get more? So I turned around and I said, is it possible that you would provide us with 80%? And they came back and they said, yes, we'll give you 80%. So we had 80% of our personal property money without having to take any inventory, to prepare any list or go through any of that process. While our friends, frankly, were spending 200 hours preparing their personal property inventory. Eventually, so we still had the opportunity, if we wanted the remainder of our personal property money, we would have to do the entire inventory to show that we reached the limit of our policy. And frankly, that still was overwhelming. And we had to evaluate, is this worth it for us? To spend the amount of time and energy that's required to put together that list, to get that extra 20%, is this really worth it with our time and our energy and our emotions as we go through that loss and that process? And we determined that I'm not sure that it is, but we have some time. We don't have to decide that immediately. And as it turned out, I was working with my insurance adjuster, and we ended up with a different insurance adjuster that which happens from time to time, by the way. The insurance adjuster that you're working with today may not be the one that you're working with a month from now or 6 months from now. It may be a different individual. And so we were working with the second insurance adjuster, and we were talking about actually our dwelling coverage. And he indicated, hey, you just don't want to leave anything on the table. And I wholeheartedly agree. You do not want to leave any of your insurance proceeds or any of your insurance money on the table, if you will, or with them when you're entitled to them. And I said, speaking of that, I'd like to revisit the issue of 100% payout for our personal property funds. And I asked, has the company changed their policy in that regard? And is it possible to get 100% of those funds without having to submit an inventory? And he said, we're taking it on a case-by-case basis. And at that point, I knew that I had a chance. So the case-by-case basis with our company was based upon extenuating circumstances. So that's a broad category. And so I wrote a letter. He said, write a letter to me and explain your circumstances, and I'll submit it. So I wrote a letter. I explained how difficult our year had been, how the things that we were experiencing personally. I got very personal, frankly, and explained to them just how difficult this was, and how spending the amount of time that would be required was a huge burden for us. As an attorney, I don't get paid if I'm not working, if I'm not billing, and my wife also her work also requires that if she's not working, then she's not getting paid either. It's not like we can take vacation time or sick time or anything like that to prepare this. So I explained everything. And again, I was very honest and open about how this has really impacted us. And I think insurance companies respond to your being human, and the reality that this is a very personal loss. This is a huge loss. They know it from the reports that they've seen, and certainly the people that they're working with in processing claims. But when they know it with you personally, then I think you have a better chance. So anyway, we wrote the letter and we submitted that, and within a couple of weeks, we got a response that the insurance company had approved paying out our personal property funds 100% without us having to prepare that inventory sheet. So I encourage you to be persistent, to be strategic, to continue to ask. Things change over time, and it's worth continuing to ask that question. You have time to put this together. Now, the challenge is you can probably ask for enough to really replace quite a bit of your things before you have to start preparing an inventory sheet, if that's in fact what you're going to have to do. Once you get to the point where it's clear that you have no other option but to prepare an inventory, there are great tools and resources. I'm going to share some of those with you a little bit later on here. But be mindful of the fact that there is a way, it is possible. And some companies, frankly, you don't even need to ask the difficult question. I know that I've spoken with insurance agents who have said that the companies that they represent have just automatically determined that they were going to pay out 100% of the personal property funds without anybody having, any of their customers having to prepare that list. So important that you identify that. You might also want to just start jotting some notes down as to what things are there that you might be able to remember, or gathering photos that you may have had saved electronically, or photos of your home, photos of your living spaces that might identify those things. All right, let's talk about loss of use. The loss of use category is, again, going to pay for you to live somewhere else. And included in that is any rent that you are due, or not that you're due, that you're having to pay. And to the extent that you decide that you're going to not purchase furnishings yet, it will cover the cost of renting furniture. It will cover the cost of your all of the I don't know the actual name, but it's your kitchen utensils and plates and things of that sort, your bathroom towels and the things that you need to be able to live. All of those can be provided to you through your loss of use. But I would caution you as to whether or not you use loss of use funds to do that. You want to evaluate, what does your policy specifically say? Our policy had a dollar amount that with loss of use. Some policies have a time period. So we have friends whose policy said we'll pay your expenses while you're displaced from your home for, I believe it either 12 or 24 months, and in the state when it's a disaster, then I believe that's an automatic 2 years. So even if your policy says that they'll pay for 1 year, the likelihood is high. I'm pretty sure that you will have 2 years of that kind of coverage. But again, it's really, what does your policy state? Is it a time period or is it a dollar amount? So if it's a time period, it may make perfect sense for you to rent furnishings, or to have your insurance company supply all of the essentials, your kitchen things and your bathroom things, things of that sort can be paid out of your loss of use funds. If it's a dollar amount, you might not want to spend the money on renting furnishings and other supplies that could be used for paying rent. And you need to determine it's really going to be based upon, how much is rent going to be, and how much money do you have in your policy to be able to provide for that. In my case, we had a specific dollar amount, and so we did not opt to utilize those dollars to rent furniture. We wanted to instead use our personal property money to purchase furniture. And we purchased it knowing that we were planning for the future, which is another issue. So there may be a mix here. So you may choose to not purchase rent furniture, but purchase the things in your kitchen. You're going to be using plates and forks and napkins, or placemats, and a mixer and pots and pans. You're going to be using those for the future. You don't have to be concerned about are you going to get the right thing. Whereas with your furniture, you may want to wait until you rebuild and decide, no, I'll buy furniture down the road. So it's a strategic decision, but I would say it's an important one to be considering as you are as you're looking at how you're going to use your personal property money. Your loss of use money. Another factor with loss of use is most companies will only pay rent for your loss of use, for your monthly living expenses. But there are some other opportunities available, and one is that you may have the capacity to purchase another home while you're rebuilding. Fortunately, my wife and I we had a bit of a down payment we were able to make, and our insurance company allowed for us to use our loss of use funds to make an extra house payment for the house that we purchased, as to use our loss of use money to make that house payment for the next couple of years while we're rebuilding. So that is a possibility. It's something that you would need to explore with your insurance company. And even if they don't allow that, there are some additional strategies that I've used with clients. It's resulted in establishing a company that will purchase the house, and then the company leases back to you as the insured, and the insurance company will pay that rent. If you'd like more information on that, again, you can email me email me, and I'll be glad to talk with you about how that might work. Again, we needed our down payment. We weren't able to use insurance proceeds to make a down payment, but we were able to make a down payment on a house and then use our insurance proceeds to pay our mortgage with that. All right, let's move on to working with your insurance company and filing your claims. First of all, you want to do everything in writing. You are going to be talking with your adjuster, of course, but you want to document what you have, the conversations that you've had. And you also want to make sure that when you're asking for something, that you're doing that in writing. So I would suggest that if you're saying, hey, we need this extra $10,000 in personal property money so that we can replace whatever our kitchen items and our bathroom items. You might have that phone conversation, but I would suggest that you follow that up with an email so that it's in writing. The reason that's critical is that insurance companies are required by law to provide to you a response within a specific period of time. Let me get to another screen here that I've got, and I want. This is something that you really should become familiar with. Don't be intimidated by the fact that these are code sections of the California insurance law and everything else that is that can make people nervous when they have to read something as detailed as the law. But I can tell you that essentially it's this particular code section. It's section 2695.7 of the California Insurance Code, and it's titled the Fair Claims Settlement Practices Regulations. And essentially it establishes what your insurance company needs to do when they receive a claim from you. So this is why it's important that you do that in writing, because they have 40 days after you submit your claim to approve or deny the claim in whole or in part. So the clock starts ticking when you have submitted that claim. So my recommendation, so this process really requires a lot of record keeping, if you will. And my recommendation is that you might want to keep a ledger saying on January 3rd, 2019, I sent an email to my adjuster asking for whatever X, and then calendar out 40 days. And if they don't respond within 40 days, then they're in violation of the law. And I can tell you that that's a big deal. If they're denying or rejecting your claim, they need to put it in writing, and they need to list all of the reasons, both factual and legal, the factual and legal basis for denial or rejection. This is within that code section. If they need more time to decide whether or not they're going to approve your claim, then they need to provide you with written notification of that within that 40-day period, and then they need to update you every 30 days. Once they accept your claim, so again, if you're asking for $10,000, or if you're submitting whatever, you're submitting a payment for, well, a classic example, you like I said, with dwelling, your coverage is going to include paying for your architect and your engineers, and when you submit that, you can submit your bill. I got a monthly bill from my architect, and I submitted that to my insurance carrier. They have 40 days to approve or deny that, another 30 days to pay it. My insurance company was much better about doing that, but paying on time. But to the extent that they're not, then you know that you've got those bills. Those are valid claims, and the insurance company should be paying those in a timely manner. But they once they accept the claim, then they have to pay it within 30 days. So here is something that I had to do in my particular case. So when it got to the case of extended coverage, so the way that extended coverage works is that after you have determined how much it's actually going to cost to build your house, so basically when you have a bid to rebuild your house and you're going to demonstrate that it's more than for the sake of this example, more than your $250,000, then you need to submit that bid, and then the insurance company should approve or deny, or again, give you a reason for their needing more time, or whatever the case may be. They need to do that within 40 days. My insurance company was stalling, and I think that my assumption is that insurance companies tend to stall because the longer that they hold on to their money, frankly, the longer that they hold on to my money, the more interest. So if you can think of hundreds of thousands of dollars that are being held, and gaining interest every day. There's a significant amount of interest that they're making. I have no idea if that's their strategy, but that's what it feels like. And so I was well beyond the 40 days. My insurance company had not given me any reason for not responding, not approving or denying. They kept saying, we need more information over here. They didn't do it in the formal way. They didn't do it according to the law. So I frankly sent them a letter, and sometimes you have to do this. I sent them an email saying that, let me remind you, here's what the law says. You had 40 days. You didn't respond within 40 days. You didn't give me a reason for not approving my claim. If I don't hear back from you by the end of the business day tomorrow, I'm filing a claim with the California Insurance Commissioner. And lo and behold, the next day, my claim was approved. So while there's a bit of a threat there, there's also a bit of a holding the insurance company accountable for making sure that they're paying your claim in a timely manner. Now, I know I'm a lawyer, and I know that I feel comfortable doing that. I know that I understood the law. I think that it's something that anybody can do, and I encourage you to take advantage of making sure that your insurance carrier knows that you know the law when it comes to what they're required to do for you. All right, I want to go on to. I want to make sure. I'm going to go back to my. I'm going to go back to my outline to make sure that I'm covering things in line here. So renting, buying, or relocating in the interim. So this really is not necessarily about insurance coverage, but to some degree it does include it. As I said, you may end up buying a house if you can do that, if your insurance carrier will allow for those payments to be made that way. What our insurance company did actually is we didn't submit our mortgage payment. What we asked for is the fair rental value of the house that we lost. And by the way, it's the fair rental value of the house that we lost after the fire. So in our community, there were still many homes that were still here, of course. In Paradise, that's not the case, but what would it cost to rent a home in my community after the fire? And that cost was significantly higher than the day before the fire because the demand was so much greater. So we asked our insurance company to pay us the fair rental value of the house that we lost. What our policy actually states is that they are obligated to pay for you to maintain the same standard of living that you had before your loss. So we asked for the fair rental value. They paid us a lump sum for the first year to cover the fair rental value of our house, and we put that money aside into a separate bank account, and we're making our mortgage payment out of that. So you can rent, you can buy, and you may have determined that you're going to relocate. So let's go back to the whole issue of the extended coverage. So to the extent that you're not going to rebuild on your property and you're going to purchase something somewhere else, then you are likely, in California, you are likely entitled to your extended coverage, even if you're replacing your home with something else. It becomes a negotiating issue because, of course, you don't know what it's going to cost to rebuild your house. You're probably not going to find a contractor who's going to be willing to give you a bid simply for the sake of being able to get insurance funds. But you do have the capacity to work with your insurance company. You may need an advocate to help you through that, but you have the capacity to work with your insurance company to determine exactly how much, if not all, of your extended coverage to be able to purchase another home in another community. So know that that's an option. But just some practical things that I found to be true, that my wife and I found to be true as we kind of settled in. It took us, the fires in 2017 happened on October 9th. And we got into our house. We stayed with some friends up until just before Thanksgiving, and then once Thanksgiving hit, we were started replacing things. But we really we made an effort to make our home feel like home. So you may rent furniture, you may buy furniture, whatever you're going to do. But I encourage you to find a way to make it feel like home. When I leave the office and go home at the end of my day, I feel like I'm home. I know that the home that we're rebuilding is going to be the home that we ultimately live in, but I don't feel like I walk into my house and I'm reminded of the fact that I've lost my house, because we have personal things there now. It's probably too early. If you lost your home in the Paradise Fire, it's probably too early to make decisions of going out and finding things that are highly personal, like artwork or decor that is personal to you, or photos that you want to put up on your wall. But I encourage you over the next month or so to really look for those types of things. Find things that are going to be personal and you feel like you're home. One idea that you might want to consider is utilizing an interior decorator. Now, that might seem like something that is beyond the scope of reality for your expenses, but frankly, with the amount of personal property money that you may have received, spending a little bit of money on that to hire somebody to help you, and you might want to shop around to get somebody to help, or a price that's good, or somebody may be willing to help you without charging you. Having an interior decorator that can help make decisions. My wife and I went shopping several times after we got into our house, and we spent all day shopping for a dining room table, and we came home empty-handed. It's like, it's too overwhelming. We can't figure these things out. But our interior decorator was able to identify a store where she liked to buy furniture. She gave us 2 options of dining room tables, of living room sofas, of other things, and she helped us make those decisions in a way that was really very practical, and again, made it very much our own and made it home for us. So I encourage you to do that as you get settled in. And we really, in a positive way, we took advantage of asking for every discount available. Our loss is huge, and even though you may have sufficient funds in your insurance coverage, one, people want to help, and 2, you have no idea what it's really going to cost to get through this next couple of years, and so we asked for discounts. We said simply, are you offering a discount for fire survivors? And time and time again, we received those types of discounts, and it's worth doing. Of course, there are some stores that are advertising discounts, and we shopped at those heavily. But there are places that you can do that with, and again, I encourage you to get every discount that you possibly can. Okay, I want to talk briefly about debris removal, and actually, I already did. I'm going to just touch on that again. That you get a couple of bids if you're going to go private. Every debris removal company is not equal. There does need to be certification for the guys that are doing it. People are coming out of the woodwork to say, hey, we can help you, we can offer you this price. But there are people that they would show up and then they'd give us a bid and then they wouldn't show up anymore. They're just really make sure that you're working with somebody that you can trust, and perhaps get some referrals in addition to that. I want to talk also about using a public adjuster. So public adjusters are independent companies that will help you with your insurance claim. And in my experience and in my opinion, a total loss like what we experienced, what you may have experienced, likely does not need a public adjuster. So you're probably going to be able to get everything, or at least the maximum amount out of your insurance coverage that you can possibly get with some hard work on your part, or just some consistent work on your part. But there is a time for public adjusters. And that is, one, if you've hit a wall with your insurance company, you can't get any further. I would recommend that you don't start with a public adjuster, because they take a percentage. So if you have $500,000 ultimately in insurance proceeds and they take 10%, that's $50,000 of your insurance proceeds that's going to your public adjuster. You don't need to spend that. If you're able to get all but $200,000, and now you need a public adjuster, so perhaps what they're going to take is $20,000 instead of the $50,000. But the likelihood is high, given your loss, that you'll be able to obtain 100%, if not close to it, of your insurance proceeds without using a public adjuster. There are other times as well, and that is really depending upon your life circumstances. So I had a neighbor who was in her 80s and had a little bit of dementia, and it certainly didn't make sense for her to try to navigate the insurance process. And she hired a public adjuster. It made perfect sense that she wouldn't have to put up with the challenges, and there are challenges for sure as you walk through this process. But again, my encouragement is that you do everything you can to try to walk through the insurance process on your own. And then if you need an insurance adjuster, look at hiring one. Then you might also consider using an attorney to do the same thing. Sometimes, I know that in my case, I charge based upon my hourly rate, as opposed to, so it's my time spent as opposed to a percentage of your proceeds. And in some cases, that's much cheaper than a large percentage or even a small percentage of what your insurance proceeds might provide. All right. So with regard to, I want to go back to, I want to provide some resources for you. One is a friend and neighbor is a CPA and wealth manager, and he, that's not good. Okay, I got to stop that. Let me try to get this again and hope that I can do that without that happening on the screen. Here we go. Okay, so this is HO, meaning homeowners, HO insurance coverage calculator. So this is a PDF file that you fill in some of the blanks, and really what it does is it calculates your cost per square foot. So some builders will give you a price per square foot that they're quoting for you, and this gives you a sense of what is that. It also gives you a way to kind of identify what your coverage is. Tim Delaney is my friend and CPA. He is a partner in JDH Wealth Management, and he is willing to provide this to you as well. So if you want that, you can send me an email and I will send that to you. I can also send you the spreadsheet that I shared with you earlier, which I'll bring back up again. This particular spreadsheet, I am happy to provide that to you in an Excel format so that you can plug in the numbers, and some of you're going to need to determine. I mean, you can plug in the numbers. There are some formulas there, but they're based upon what this sample policy is. So you may need to adjust the formulas. If you're comfortable with Excel, that's not a difficult thing to do. Some other resources that I want to provide to you is, we already went there, are these particular websites. So United Policyholders is a group of lawyers who lost their homes in the Oakland fires many years ago. They started United Policyholders, recognizing that working with insurance companies is not an easy process. And I can tell you, I had heard early on that, your insurance company is going to be nice to you initially, and then they're going to be difficult to work with. And I was saying, well, that's just not true of us. We really have had a great experience with our insurance company. And that was largely true early on, but there have been some difficult times. So really understanding what your rights are, what all of the resources that are available to you. So United Policyholders has an awesome website. I know that they have been in the Chico community to help people directly, and will probably be there for a little while, but certainly their website has a lot of resources available. The California Department of Insurance has some excellent resources. So I would encourage you to log on to any of these three websites, any of these three pages in their on their website, as well as they have a variety of other resources as well. They've done a great job in the aftermath of these fires to really put resources together for those of us who have lost our homes. The first one, Wildfire Resources, is excellent. It really lays out everything that they've got on their website available. The top 10 tips also very good. And then, as I mentioned earlier, the home inventory. If you do need to put together a home inventory, then there's a great resource for you to be able to do that. I will be adding links to these after the presentation on the comment section, so you'll have that as well. And then again, the spreadsheet that I provided or that I showed you, as well as the worksheet there that my friend has provided, is something that you can request by sending me an email. So one more thing that I want to make sure, let's go back to the beginning. I want to make sure I'm covering everything. So other practical matters, I think that the keeping the numbers straight again. So I'm a spreadsheet guy, but I think that it is incredibly important and valuable for you to maintain a spreadsheet, not only of what your coverage is, but also what you've been paid. So what amounts of each of those have been provided to you, and what's left. So one thing that you should be asking for on a somewhat regular basis is a statement of loss from your insurance company. So a statement of loss is going to have, it's essentially the insurance company's spreadsheet on everything that you've claimed, what they've paid, what your coverage amount is, and how it all applies. It's 5 pages, so it's going to have a page for each one of your buckets, if you will, and it's going to have a summary page. And your insurance company is obligated to provide that to you when you ask for it. They're not obligated if you don't ask. I went for months not realizing that it was available. And once I asked, then it's like, wow, I've been working hard to try to figure out this information, and here it all is at the send of an email from the insurance company to be able to do that. I also encourage you, so on practical matters, I encourage you to keep a separate bank account for your different categories. So, and you can do that relatively easily if you bank online. If you don't, you can easily do that. You can set up an account with an online bank and frankly earn better interest than maybe some of the brick and mortar banks in your community. I bank at Capital One, and I'm earning 2% on my money as opposed to the 0.01% at the local bank on my insurance proceeds. And when you've got insurance proceeds that are healthy, if you will, more money than I would ordinarily have in my bank account, then earning that 2% is a significant amount of money. But I keep my bank accounts separate. So I have a separate bank account for dwelling, I have a separate bank account for loss of use, I have a separate bank account for personal property funds. And that allows me to make sure that I'm not spending, that I don't see it all as one big number, and that I'm really managing how that works. You may determine at some point that your rebuild is going to cost more than what your dwelling and your separate structures is going to cost, and that you don't need as much from your personal property funds. You're not going to replace everything that you absolutely lost, but you've gotten enough money to replace what you need, and then you've got money left over. You may be interested in transferring some of that money, or holding on to it in that account, or creating a separate account and calling it kind of discretionary insurance money. That may be something that you want to do, but I just encourage you to keep a separate bank account. It's very easy to do, especially with online bank accounts. And then one final thing with regard to practical matters is whether or not to get involved in one of the lawsuits that may be filed against PG&E or other parties that could potentially be responsible for the fires. And that's a very personal decision, and something that you certainly don't want to be swayed by all of the mailing and all of the billboards, all of the advertisement that's out there that is trying to compel you to get involved in a lawsuit. It may be appropriate that you do so, but you want to do so with caution. You want to do so with a firm attorneys that you feel like you can trust. And I've got some further insights in that. I've got attorneys that our firm does not handle those kinds of lawsuits. So there's nothing in this that I don't speak from a personal gain perspective. I do have some attorneys that I have referred people to. And if that's something that you're interested, you can email me in that regard as well. I think that essentially wraps up the items that I wanted to cover. And I'll just open it up here. If there are any questions, please type those out, and I'll do what I can to answer those as much as possible. Any questions? I'll give you a minute to type that out, and hopefully, if there's something coming through, we can address it now. In the meantime, I'm going to share my contact information with you again, so that you have that to the extent that you need to contact me directly. All right, I'm not seeing any questions at this time. I know that, again, it's a lot of information. Fortunately, you will be able to watch this broadcast again, and to the extent that there is something that I can help with, that you want to reach out to me personally, please feel free to do so. And with that, we will sign off again. As I know what you're going through. My heart is definitely there for you as you walk through this process. I wish you all the best, and take advantage of the resources that are available to you as you walk through this. It's a difficult time ahead. I know it full well. I encourage you to continue to pursue resources, not only the financial resources, but the community resources, the relationships, everything that may be out there available to you. I encourage you to take advantage of that and to continue to do so over time. And with that, I'll wish you a Merry Christmas and all the best as you walk through this process. Bye now.